The bears waited with bated breath today for the markets to flush down. It just wasn't going to happen because the bulls were on the move. There were three bear barriers that the bulls had to jump over for us to believe that the markets were actually going to go back and get back to all-time highs and make a full V-shaped recovery. The first one was on the S&P 500, had to get above the 50 SMA. That was a barrier that it was facing going into yesterday's close. And in addition to that, price ended at a 3-point descending line of resistance. Well, in the morning, price broke above both, gapped up above the 50 SMA and that resistance. And I'm going to give you an overview of what moved the markets today, but it didn't jump over the final bear barrier that I've been bringing to your guys' attention today, and that was the lack of volume. This entire up move has been on decreased volume. The last 2 days before today, the volume on the SPY was down 40%, and today the volume was down 17%. So even though we gapped up and the price moved higher, it's all been largely without wholesale, perhaps institutional buying pressure on these markets. We're going up on low volume. And I will say it again, you have three factors that contribute to a strong bull move. The first one is price. That's your trend. The second one is volume. That's your strength. And the third one is momentum, and that is your acceleration. We are going up, but without the volume and the momentum. And we can continue to climb that way for a long time, but in general, when you don't have all three factors, you've got bearish divergence in the bull run. Now, we're going to analyze today. I'm going to do an audit on the Magnificent Seven because some are showing better performance based on the metrics that I just gave you. Some are actually showing a higher price trend on higher volume with improving acceleration. And those are the ones we want to look at because those are the ones that are going to outperform the rest. And there's some of the Magnificent Seven that are significantly underperforming. Even though they did participate in the rally today, their volume is abysmal and their momentum is slowing to a crawl, and they're still in bear territory. Even though we got a green candle, they're in big trouble. Now, the reason why we want to look at these two scenarios is we want to look at the fastest moving car that's going up. And we also want to know that when these markets reverse and the trend begins to go down, where do we go to short? Which of the Magnificent Seven do we run over to and buy puts on? I'm going to break it down for you guys in my full Magnificent Seven and the SPY audit today. I've done the deep dive research for you guys, and I think you'll appreciate it. This is the Stocks with Josh show. Thank you for showing up. Thank you for hitting the like. Thank you for watching the show. Hit the like and subscribe to get content, to get analysis on stock and crypto every day. All right, before we get into that, I want to talk about how this day kicked off and what's been moving this market. In particular, pre-market was green. Amazon, I identified them early in the Stocks with Josh Discord as a potential play for the day. Now, I did jump into some calls on Amazon in the morning. I was expecting a little bit of pullback. It turned out to be a momentum play. The pullback never came. Those options shot up 70 to 80%. I was never able to notify the family. Felt bad about that. I know some of you guys will be upset. The reason why I mention it is that I then turned around and gave everybody a swing stock, which is not an option play. It's one where you just buy the shares with a target in mind, and that turned around. As soon as I notified it, it also went up $1. Now, what's nice about that is if you can follow a trade alert and it moves immediately in the positive direction, now you can set your stop loss and you can protect your capital. And so the beauty of that is trading in a community. And it's not just me and the Chart Goat University. I'm there. The Crown traders are there. Airtwan, Miss Mary, the MOOMOO community are there. Everybody is helping each other, providing each other research. It's an extremely dynamic and educational community. Today, I'm going to be dropping a video that you don't want to miss. It's a micro class on moving averages, and it's not about just following somebody else. It's about learning how to chart, not trading alone. Check out the Chart Goat University. So what were the factors that led to the market taking off today? Well, there was four. The first one was the fact that we were still riding high on the soft CPI, the inflation data that had come down and had been reported the day before. A lot of market participants believe that that's going to empower the Fed to cut rates. And then we had July retail sales posted their largest increase in 1.5 years. It was a big surprise that retail was doing as well as reported. And then after that, Walmart reported earnings and absolutely crushed the numbers, and the stock popped, and they gave good future guidance, which was crucial because even if they had done well, if they were pointing to an economy or a slowdown in sales in the days ahead, the stock would have been absolutely slaughtered. Retail sales report was good. CPI was soft and guidance was good. All of this was a perfect storm for us then getting the unemployment report. Weekly initial unemployment claims unexpectedly fell to a 5-week low. You got to realize the entire drop-off that we've experienced since we hit all-time highs was largely based on the fear of unemployment rising, because a Goldilocks environment is when unemployment stays down and the Fed brings inflation down. Stagflation is when inflation doesn't come down, but unemployment rises. That is not what the market wants, and that's what the market feared was at hand. And this data report today gave the market confidence that it had perhaps overreacted, which we had also seen in how quickly the VIX had calmed down after spiking up to above 60 the other day. In a very rare event, it took only 7 days for the market to realize that that was an extreme overreaction. Now, we do have some concerns lingering over the economy. The market is still at all-time highs, and we do have the question of how much higher are we going to go in 2024. But right now, the data was on the bulls side, and the bulls ran. All right, let's get into the 3 bull factor metrics that we're going to use to audit the Magnificent Seven. It's going to be volume, momentum, and price. And we're going to start off with volume performance. And so all of these stocks went up today. But the question is, on what level of volume? The number one stock at the top of this chart from worst to best is Apple. Apple went up today, but on negative 34% volume. You got to be concerned that the institutional buyers are not showing up to Apple right now, this best-in-class top market cap company. And then right behind them, Microsoft, right, with negative 25% volume, even on an up day. And then the SPY, even though it wasn't as bad as the last 2 days, it had negative 17%, NVIDIA, negative 14, Meta, negative 14, Google, negative 8. Now, there are 2 outliers when it comes to volume, and this is what we wanted to identify in regards to price and volume strength, and that's Tesla and Amazon. Amazon was a pre-market winner, and throughout the day, it went up on positive 46% volume. So that's a huge difference to the negative volume that's reflected in the Apple upswing. Tesla went up today with a positive 25% volume, and so you've got to acknowledge that we got price and strength out of Tesla and Amazon, and you can imagine that that could continue. That's a sign that they're outperforming their peers. Now we're going to look at momentum. And how am I going to measure momentum? Well, I'm going to use the RSI and the MACD. And in very simple terms, when you're above the 50% mark on the RSI, you're in the bull territory. When you're below 50%, you're in the bear territory. On the MACD, when you're above the 0 line, you're in bull territory. When you're beneath the 0 line, you're in bear territory. So for Google, at the top of the list, along with Microsoft, Tesla, and Amazon, they're all still in bear territory. So again, Google, Microsoft, Tesla, and Amazon have not broken out of the bear territory when it comes to the RSI and the MACD. So we've got to be careful with them. And then you've got NVIDIA and the SPY. NVIDIA and the SPY have something in common. It's above the 50% on the RSI, but below the 0 on the MACD. And so we're watching for more acceleration and buying in both of those. Now, the 2 companies that are outliers for acceleration are actually Apple and Meta. Now, Apple was barely out of bear territory, but was technically right over the line. And Meta, yet again, was one of the top performers as far as acceleration goes. So it was above the 50 on the RSI and above the 0 on the MACD. Now, our last metrics is going to be price performance. How much has the price moved up compared to its peers? Now, the first stock from worst to best, it's got to be Tesla. Tesla's still beat down, and the price action is way more volatile than any of the other Magnificent Seven. They're still down 20% from their all-time high. And then Google down 15%. That to me is reflective of Google underperforming and being in trouble. Now, NVIDIA and Amazon are around negative 12% from their all-time high. And Microsoft is down 10% from its all-time high. Apple is only down 5% from its all-time high. And the SPY is practically fully recovered. We've got 2.2% left to go. Perhaps we'll get that tomorrow and be fully restored to a V-shaped recovery. Now, the best performing stock in regards to price recovery is Meta. So Meta is, again, at the top of the list for relative strength. It's practically fully back. It's only half a point away from being back to its all-time high price. So what did we learn, and what's the takeaway analysis of analyzing the strength, trend, volume, and momentum of these stocks? Well, right off the bat, Meta is best in class. And so if you want to trade strength, then you want to be in Meta right now. Google is worst in class overall. You can imagine that the bears have their eye on Google stock. And the two that are worth noting, Apple had the worst performance in regards to volume. And my biggest concern there is obviously in light of Warren Buffett selling half of his Apple. The question is the volume low because institutional buyers are trying to unwind their position. And so even though overall the performance was not bad from Apple, it did have the lowest volume, the lowest strength in the up move. And then you've got Amazon and Tesla were actually the best in positive volume. And so you see very strong interest there. All we need is to get the acceleration in line, and we'll have all three factors to a strong bull move for Amazon and Tesla. Guys, if you enjoyed that, then hit the like. I'm going to drop those charts in the Discord this evening. I also have a micro class on moving averages that I'm going to drop this evening in the Discord. Guys, you can check that out. I'll leave a link in the top pinned comment for the Stocks with Josh Discord, the Chart Goat University, where you don't have to trade alone and you can learn how to read those charts. Guys, check it out. Hit that like and subscribe. Peace and blessings. We'll talk to you tomorrow.